Hello students and welcome back to part 2 of the Electro question where we will be completing part number D, which asks us to do the general journal entries for the specific loan that we've covered. So I'm just quickly going to go back to D and just make sure that we are on the same page with regards to the required part. So it says construct the general journal entries for building Tro in terms of IAS 23 and IAS 16 for the years ended 30 April 2021. All right, so now we need to go back to the calculations we've done in B and C and also back to the progress payments that was made, and we need to account for these. So the first entry that I suggest we make is on the 1st of July 2020, where we receive the loan of 1.6 million, because please remember the other 900,000 we've already accounted for it in required number A, where we put the 900,000 in our savings account. So here we're going to say we debit the savings account, we are going to credit the loan. Please remember that loans need to be recorded at their present values, and that was 1.6 million. The next entry I believe we need to do is the first progress payment that is made. And the first progress payment is made on the 1st of August 2020. And here we pay 500,000 Rand in the first instance. So I'm going to increase the historical cost of building Tro. And this amount needs to come from my savings account. And here we've even indicated that it came from the savings account. And I'm just going to make my double entry. So we debit the historical cost. The money comes out of the savings account, which we will then credit. Right, then an entry that needs to be made is on the 30th of September 2020. Because this is the first lapse of a 3-month interval that requires of us to make a capital and interest payment. So it is said in the question that capital and interest are due every 3 months. So the first 3 months lapsed because it was July, August, September. So on 30 September, we have 3 months that have lapsed. So we have to account for interest. So what we know is that some of the interest needs to be capitalized. So that will go to the building's historical cost. Then some of it will be an interest expense or a finance cost. And this is the profit and loss portion of the calculation. So we book this amount to profit and loss, so it will be displayed in your statement of profit and loss and other comprehensive income just before you get your taxation for the year. They normally say finance cost, right? It will go to that line item. And then we need to take that amount to the loan. Then the loan will be paid off out of the bank account. So please make sure that when we repay the loan, the repayment goes out of the bank account, because you don't put a loan in a savings account and then you repay the loan from that loan money from the savings account. When you pay the loan, you need to generate money from some other place so that you can repay the loan. But you don't get a loan for 2 million Rand and then you use 1 million of the 2 million Rand to pay back the other million. That's not how we do it. So therefore, this double entry cannot be savings account. Please mind that. Right, so now we need to go back and see, because typically this will be our capitalization entry. Then this will be our actual entry, and this will be our balancing figure. So if I go back to my calculations, I've said in this 3 months, the interest is 48,000 and 2 months of it can be capitalized. So going back to D, I'm going to say I need to take the 48,000 divided by 3, 2 of it can be capitalized. Then for the actual interest, we said all 3 months fall within our financial year. So the full 48,000 will be an actual interest amount. And then the balancing figure, which goes to profit and loss, should be 16,000. Yes. All right, then we need to make the loan payment. Please remember that this is the payment that you calculated here in B. So in order for me not to make a typing error, let's see if I can just do that. So that is the payment that was generated by your financial calculator. And there we have made our first 3 months have lapsed and we've made our first payment. Then there is another payment on the 1st of October. And that is a progress payment, I believe. And it is worth, let me just check my question to ensure, it's worth 400,000. So a progress payment, I'm just going to pay it from the savings account, and it is worth 400,000. Thereafter, there is another progress payment on the 1st of November. So again, same debits and credits, you're increasing the historical cost, taking the money out of your savings account, and that was an amount of 600,000. That was a progress payment due on the 1st of November. Right, then our 3 months have lapsed. We are on the 31st of December, and another 3 months have lapsed for us. So there's a payment due on the 31st of December. Let me just make sure that everything is written in Arial. You know, Excel is only my friend some or other times. Right, so now we need to make our payment and we need to go and see. All right, so we're going to have the building TRO. Then we may have some or other interest expense, which is profit and loss. And then we will have our amount, which is booked to loan, and the loan is decreased when we make a payment. So if we go back to our calculations, you will find that for capitalization purposes, all 3 months fell within the capitalization period. So we can use this amount as is. So here I'm going to say equals that. Then also within the financial year, all 3 months was within the financial year. So all 3 months which we capitalized, all 3 months fell within our financial year. So for the loan, it's going to be equal to this amount, and then there will be no balancing figure required. Then we make a loan payment. It should be the payment that we've generated on our financial calculators. So it is this payment that we've calculated there. All right, then the next entry I believe that we need to do is on the 1st of February. And on the 1st of February, we make a payment again, a progress payment. And the progress payment in February was 500,000. All right, thereafter, there should be a lapse of another 3 months by the end of March. So here we can again see that a payment is due. So at this point, I am literally just going to copy and paste and just put in the correct date, 31st of March 2021. Now we need to go and check our calculations and see what portion of the interest can be capitalized. If we go back to our calculation, all 3 months can be capitalized because 3 months fell within the capitalization period. So I will simply say equals this amount, and then the loan also equals this amount because that is the portion which represents the actual interest, and all 3 months fell within our financial year. So again, you will find that the interest expense will be nothing. We need to make the payment as originally calculated on our calculators. Then I believe there's a final payment on the 1st of April 2021. And here we make the final payment towards the progress of building Tro. So again, from the savings account, we take the last money, and that was a total of 500,000 as well. Right, thereafter we have our financial year end. And that should be 30 April 2021. Right, so the first thing I am going to account for is then my remaining interest expense for the year. But please remember that we're just accounting for this because we've reached the end of our financial year, but a payment is not due. All right, so we will not make that payment, which is the capital and the interest, because it's only due in the next 3 months, which is June. So here I'm going to say some of the expense in terms of your interest cost will go to building Tro. I can actually just copy this again. Right, now I have to see, in terms of the month of April, what can be capitalized to my building, what is expensed, what is taken to the loan. And of course, in this instance, we will not make the payment because the payment isn't due. However, we need to account for interest for 12 months. That's why we need to do this entry. If I go back, it says that no capitalization falls here. All right, blank means nothing. And 1 month of the financial year. So here I'm going to say nothing can be capitalized. And 1 month of the financial year falls within this interval. So I'm going to take that amount and I am going to divide it by the 3 months, but only 1 month is in our financial year. The answer should definitely not be 0. Let me just copy. Let's try again. No, clearly it's not going to work. So I'm copying this amount. Let's just paste it somewhere. Right, so this was for 3 months. So here I'm going to argue I need to take this amount divided by 3 months, but 1 month falls within our financial year. And obviously the interest, profit and loss needs to be a balancing figure. So there I am accounting for it as profit and loss because it falls without the capitalization period. Right. The next entry we have to do is with regards to our savings account and our interest. So you might ask me, but why haven't we done the interest income calculations together with these payments? Because the question reads that it is a 2% simple interest per annum. So if it's 2% per annum, it means that the interest is only paid after the year or at year end, right? So because it's per year, the rate is per year, we only account for it when our year end comes. Whereas this is compounded quarterly, so we have to do it in quarters. Here we're going to say, right, my savings account will increase. And some of it will be interest income, which will be taken to profit and loss, which is other income in your statement of profit and loss. And then some of it will be paid off against the building. So let's see. In the savings account, we will have our total actual. For the building, we will have the amount that can be capitalized. And then this profit and loss portion will be my balancing figure. So I need to go and figure that out. But I've already done the calculations. So if I go back to my table, I know that I've highlighted the capitalization portion, and it was 16,000 Rand. So to be capitalized, I'm going to type it in here, and it's going to make the historical cost lesser. Then what was the total actual interest income? It was this amount, 21,666.67. And then we're going to need a balancing figure, which will be posted to profit or loss. So there I have accounted for my interest income. There was also a rental expense that we have to account for, because there was a time frame for which we had to pay rent because we didn't have a building. One building was sold and the other building was still being constructed. So thus we were in a little situation where we had to rent on a month-to-month basis. And they tell us in the question that the first rental payment is due on 30 June and that they move into the new building on 1 April. So we had to pay 30 June, July, August, September, October, November, December, January, February, and March. April, we're not going to pay for April because 1 April we were already out. We were already moving into the new. So there were 10 months of rental expense that we incurred. And that was a 12,000 Rand per month times 10 months. And that was 120,000. All right, then we still have to do our depreciation and our accumulated depreciation, because the question states here we need to mind IAS 16. So IAS 16 is what? It's PPE and depreciation and lifespans and residual values. That is what IAS 16 is all about. So in order to comply with that, we need to do our depreciation and our accumulated depreciation calculation. So this will be accumulated depreciation. Look at me typing. And it will be on the building trove. Now what we need to do is we need to go and do a calc. And we need a calc for our cost price of the asset. How do I get to a cost price? Because if I don't know the cost price, I will not know what the residual value is, and consequently, I will not know what my depreciation should be. So it's very important to calculate your cost price. The cost price is based firstly on the sum of all your progress payments. And if you add up your progress payment, it should be 2.5 million. And clearly, this Ariel does not want to comply today. Right, then we have our interest expense that was capitalized, and then also we have our interest income that was capitalized. So for the interest income, it's going to be a negative because it makes the carry value of the cost lesser. And I believe the interest income was 16,000 that we had to capitalize. Then we need to go and find, but what is the capital that we have, or the interest that was capitalized? So now we need to go and look for our payments. Where did we capitalize our interest? Well, there was a capitalization there. Made a payment, there was a capitalization there. There was a capitalization there. And that was it. So we're adding all the journals together where we had capitalized it, and it would be the same as the calculation that we did there. Is a nice cross check. So what is the total cost price of this asset? It needs to be the sum of everything. So it is the sum of the progress payments plus all the interest expense capitalized minus all the interest income capitalized. And if I do that calculation, it's 260,171 and 99 cents. We also need to calculate our residual value. And they said that is a 5%, I believe. Let me just go back to the question and check. Yes, residual value is 5% of the historical cost price. So we've just calculated the historical cost price, and we need 5% of it should be the residual. So it's going to be this times 5%. So there's our residual value. We just need to round it to 2 decimals. Right, and now we can calculate our depreciation. So to get to the depreciation, we need a lifespan. And I believe the lifespan is given to us in the policy. And we are told that it is 25 years. So I'm just going to go back and say it's 25 and it's years. And then we need to go and count the months in use. This building Tro was ready for use on the 1st of April. So we could have only used it for 1 month because our year end was 30 April 2021. So it was only used for 1 month. So I need to go back and indicate it. It's 1 month. So if I'm calculating my depreciation then, I'm going to say it is the historical cost minus the residual value divided by 25 years times 1 month. And that gives me depreciation of 8238,88. Right, so I just need to go and book it. Debit depreciation, credit accumulated depreciation. Right, so this is all the possible journal entries that I can think of for us to do with regard to this question for Electro. So if you have done your calculations duly, right, and you did all the steps and you did all the calculations, then the journal entries are much easier because now you just have to remember to account for the progress payments, and you need to remember to calculate, for example, your cost price so that you can get to the depreciation and know how to calculate the cost price. But you have simplified this calculation or this requirement of doing the general journal entries when you have properly done all your calculations. Right, so I hope that you have enjoyed this video, that you're able to use the summaries that I have provided, and then I will again see you in our next video. Keep well until then.